Hello, everybody. We're going to perform a quick analysis of Netflix using Alpha Strategy. So this software is very easy to use, right? And this analysis will just be a four-step analysis. The first step is to open the Overview tab, where we can access the graph, the prices variation, and the KPIs, the key metrics of the business. So for example, if there's a metric I don't understand, like the price to book ratio, I can just click on it and I get the definition with a formula. So it's perfect and very easy to use, even if you don't know all of the concepts. Just below, you have a brief description and a direct link to the annual reports and some main information such as the link of the website, the industry, the executive director or CEO of the company, etc., etc. So once we've done a quick overview, we can go to financials to watch in detail the numbers, but I really recommend to skip that point and go to fundamentals, where you can see the 8 fundamentals of the company. Now, right here, what we can see is that there are only 2 out of 8 crosses, which is very good. And these two concern the PE and the price to free cash flow. So they are valuation metrics, and they are over 22. And here you can click and just understand what this description is, what this metric is, and why it matters. Um, but right here, we could just, as an overview, very quickly see that the financial health of the company is very good. It's growing very fast, but the valuation metrics, excuse me, are a little bit high. But we'll see if it's still a good investment or not. Then we can go to industry positioning. This would be the third step of the analysis. You can watch the PE ratio and compare it to the industry median, right? So you can see that Netflix is trading at a PE that is higher, more expensive than its industry median, but it has an ROIC, a return on invested capital, that is much higher than its industry median, right? And so here we can plot a graph and see who their competitors are, such as Live Nation Entertainment, Dreamland, the Walt Disney Company, etc., etc. This would be the industry median. And there are a lot of more graphs about share dilution, long-term liabilities over free cash flow to compare this company to its industry. Now, the last step would be the stock analyzer tool. You have here a very quick and easy to use guide to understand this tool, but let's just try it out very quickly for a moment. We're going to perform a 5-year into the future analysis of Netflix. We're going to assume that Netflix is going to have a revenue growth of about 15% over the next 5 years, a profit margin of 25%, free cash flow profit margin of 25%, and let's just assume that they will keep their multiples at the current valuation. Let's just say I want a desired annual return. This is something you need to input as an investor of say 13%. Okay, so this would be the IRR that I want, the internal rate of return. Okay, so if I just click run analysis, it tells me exactly what these numbers mean and what prices I should pay to obtain this 13% if this hypothesis came true, right? And it spits it out in green colors because these are currently higher than the current trading price, meaning that if I paid today's price, which is $83, and this hypothesis came true, I would get a 21% return, which is well above the 13% that I really desire, right? So this is why it comes out in green, because to obtain this 13%, I would need to buy at $105, and it's currently trading below that. So I would meet that desired annual return, of course, if all these hypotheses came true. So it's a very intuitive and quickly analysis, very easy to use, um, using the example of a trending stock such as Netflix. Hope you liked it, and we'll keep analyzing companies in the future.